Well, good Friday afternoon. This is Rich, and the market's once again ready for ready for the weekend, I should say. We've had some liquidation again this week. Traders continuing to take a risk-off attitude towards the commodity markets, towards many markets, in fact. The euro continues to slide. Interest rates in Europe jumping higher, with people not willing to take on bond ownership. We heard overnight in Italy up to 8% interest being required to take on ownership. So I think that's a sign of things to come, not only in Europe but overseas as well. We did see the euro therefore drop, the dollar rise, and that did lead to more selling, more risk-off attitude in the grains again here today. At the close tonight, we had December corn finished down 6.5 cents at 5.82 1/4. March corn down 6.5 at 5.89. January soybeans down 13 1/4 at 11.09 1/4. March soybeans down 13 1/4 at 11.18 1/4. December cotton up 0.11 at 90.82. December 12 cotton down 102 at 87.92. January rice finished down 35 points at 14.20. December Chicago wheat closed down 5 1/4 at 5.74. December Kansas City down 5.5 at 6.43 1/2, and December Minneapolis down 8.5 cents at 8.27 1/4. As I mentioned, the dollar firmer here today. We did see crude oil, however, manage to climb back higher. That did bring the grains off of their lows. Corn had been down double digits. Soybeans also were substantially lower, and so we did see them come back a little bit. The dollar closing up 115, or excuse me, crude oil up 115 at 97.32. Gold down $15 an ounce at 16.81. The Dow down 44 points at 11,190. Dan Huber mentions in his technical comments, and I did include those in the outlook tonight, that looking for a cycle bottom here, maybe the end of next week, and so we'll kind of hold off until then. However, Dan doesn't think maybe we'll see much of a turnaround in the markets till possibly after the first of the year. So we'll kind of keep that in mind here as we work ahead and come up with some strategies, and we'll be visiting with you next week. Have a good weekend.